mode.
Hey everyone, and welcome to the presentation on why Forex binary options are best for beginning traders. My name is Gail Mercer. I'm the founder of TradersHelpDesk.com, and I'm going to be your hostess for this morning. Now, before we get started, please take just a moment to read over the Nadex risk disclaimer. Basically, you should never trade with money you cannot afford to lose because trading does involve risk and you can lose money, even with binary options. Now, for those of you that do not know me, my name is Gail Mercer. I am the founder of Traders Help Desk. I have more than 15 years of trading experience. I started out with a company that programmed indicators and really just fell in love with price bars. I specialize in price action, volume analysis, and divergence because I believe they are leading indicators. I'm also a frequent contributor to Stocks and Commodities magazine, Traders World, and Top Shelf magazine. I've also been a speaker at Traders Expo, Traders World Online Expo, and the Wyckoff Volume Conference. I'm also the author of Trading Nadex Binary Options Using Currencies, Trading Nadex Binary Options, Keeping It Simple Strategies, as well as the New Trader's Guide to Trading Nadex Binary Option in Spreads. Any of these books can be purchased on my website or on Amazon.com. Now, the first question that most traders have is why trade binary options? Well, for me, it's as simple as promoting critical thinking when you're entering or exiting a trade. In other words, you think more in terms of yes, no, versus maybes or, well, should I or shouldn't I? The question is very, very specific. Okay, for example, in this one, the USD Swiss franc greater than 1.0120. The actual question is, are you willing to risk the maximum on the risk? Remember, all trading involves risk. So are you willing to risk $260 to make $740? In other words, if you believe that the USD Swiss franc will be greater than 1.0120 by 3 p.m., then you may say, yes, I think that's worth the risk, and you enter the trade. But if you say, no, I don't think that's worth the risk, you simply do not enter the trade. That's how simple it is, okay? Now, what are the differences between Forex and other markets? Well, Forex is the largest market in the world. They do not have a central exchange. Now, that means that there's no true volume, but we could supplement that volume with a tick count. It is a 23-hour market. Now, if you were like me when you first started trading, you have a full-time job. Well, because this is a 23-hour market, you can actually trade in the evenings. Maybe you work at night. Well, you still have the daytime to trade. Or maybe, you trade London. I started out trading Asia and London. Okay, so it gives you more opportunities regardless of whether you're a full-time trader or you're just a part-time trader. There's also different market openings around the clock. You have Australia, you have Asia, you have Germany, you have London, you have the US. Just about any time you want to trade, Forex is there and it's available. Now, you have to understand the pips when you're trading Forex, okay? Most of the currencies have 5 decimal points, but that 5th decimal point is actually considered a half pip. The exception to that are the yen currencies. The yen currencies, for example, the Aussie yen, the Euro yen, the British pound yen, the USD JPY, they have 3 decimal points, but that third decimal point is actually considered the half pip. Okay, you also need to know the strengths and weaknesses of the currencies and how they compare to other markets. For example, the Aussie, okay, 5% of the Australian GDP is from mining, whether it's gold, diamonds, uranium, nickel, you know, that's where 5% of their GDP comes from. So, you know, if gold is going down, there's a likelihood that the Aussie is also going down. The same thing with the CAD. It's the 7th largest producer of crude, okay? Now, because the CAD is the second Forex symbol in the pair, the USD is the first part of the currency pair, then it is said to have a negative correlation with crude. In other words, if crude is going up, then more than likely the USD CAD will be going down. Why? Because the CAD would be going up with crude, but that makes the USD portion, which is the first portion of the currency pair, would be going down. In other words, it would be weak on the USD side. Now, let's understand a pip versus a half pip. On the USD JPY, if the currency is trading at 108.688, the actual pip move would be 108.68 to 108.69. Okay, it is that third digit, the very last digit here, that is considered the half pip. Now, this half pip does make a difference in Nadex, okay? Because remember, your strike prices are either greater than or less than or equal to, okay? So in this case, if you had bought a strike at 108.68, that half pip can actually make a difference because price would need to be 108.681 for that binary to pay out, either 1 or greater on the half pip side. Does everybody understand that? Now, on the short side, or if you had sold the 108.68, okay, it could be equal to, okay, again, and you need to look at the half pips, because on the half pips, it would need to be 108.680 or less. Does everybody understand that? Let's say that this was 108.681. Well, then you would lose, okay? It has to be equal to or less than, okay? Any questions on that? And again, on the yen pairs, it's 3 decimal points, the third being the half pip. On all the other currencies, it would be 5 decimal points with the 5th digit being the half pip. Now, you do have different currencies as far as 5-minute expirations and 2-hour expirations. Now, this chart shows you the ones that have 5-minute versus the 2-hour. For example, the Aussie dollar has 5-minute, the euro yen, the euro dollar, British pound yen, British pound dollar, US CAD, USD JPY, all have 5-minute expirations. Then the Aussie yen, the first 2-hour expiration is at 10 a.m. That means that they open at 8 a.m. Okay. The Aussie dollar, the first one begins Sunday at 8 p.m. That means it opens at 6 p.m. Okay. The euro British pound begins at 8 a.m. with the first expiration at 10 a.m. The same for the British pound yen. The first 2 hour becomes available at 8 a.m. and it expires at 10 a.m. Same scenario on the USD CAD and the USD Swiss franc. They both open with a 2 hour binary at 8 a.m. Now, all of the others, USD JPY, British pound dollar, the euro dollar, the euro yen, they all open Sunday night at 6 p.m. with the first expiration at 8 p.m. Any questions on when the binaries are available? In some Sunday nights, I love to trade because there can be some really nice moves on Sunday evening. Is it every Sunday? No, unfortunately not. But when they do, it's a really nice, quiet time to trade. Now, you also have differences between the strike width. Now, what is the strike width? Well, the strike width, if you look at the binaries, let's say that you have a binary available at 1000. When or where is the next strike? Well, it depends on which binary you're looking at. For example, I can tell you on the Aussie yen, if the first one is 1.000, the next one would be 1.05. Okay, why? Because it is a 5 pip strike width. Okay, so that means if the first one is 1.00, remember, you don't look at the half pip on these. Okay, and this is a yen pair, it would be 1.05 the next one, 1.10 is the next one, 1.15 is the next one. Okay, so the difference between these strikes is what is known as the strike width. Will a replay be available? Yes, it will. Okay, so in that case, if you're looking at this chart, you can see the Aussie yen is a 5 pip strike width. The Aussie dollar is 4. The Euro British pound is 10. The Euro yen is 10. Euro dollar is 4. British pound yen is 10. British pound dollar is 10. US CAD is 10. USD Swiss franc is 4. USD JPY is 4. The ones that I tend to favor a lot are the ones that have this 4 and 5 pip strike width, because that means you can go out of the money pretty easily. Okay. Now, all of the dailies across the board, regardless of which currency you are trading, has a strike width of 20. So again, that means, sorry about that. That means that if you have a strike price, let's say, again, let's use the 1.00, okay, on the daily, the next strike would be 120 on the Aussie yen, okay? The weekly, if you had it at 1.00, the next strike price will be at 1.50. It is a 50 pip strike width on weeklies, okay? Now, when does Forex move? You know, that's a question that everybody typically will have. Well, Australia opens at 5 p.m. New York time. That means that normally the Aussie dollar and the Aussie yen will move, okay? Then Asia opens at 8 p.m. New York time. So you can look at the Aussie yen, Euro yen, British pound yen, USD yen. Germany, it opens at 2 a.m. New York time. So you could trade any of the euros, you could trade the USD Swiss franc, you could trade the British pound dollar, or you could trade the British pound yen. Now remember, if you're trading the Euro British Pound at 2 a.m., you would need to use the dailies or the weeklies because the 2-hour binaries are not open until 8 a.m. Then London opens at 3 a.m. And again, you could trade any of the euros or the British pound currencies. Of course, then you have the U.S. Open. The U.S. Open is typically the biggest opening in the Forex market. It's also the fastest, has the most volatility typically. Okay, it's not always, but typically it is. It also opens at 8 a.m., which is considered the cash market opening. And you can trade just about anything during the U.S. Open. And that is because the U.S. opening is one of the biggest in Forex, typically. Okay, it's not always, but typically. Now, market reports that affect the different currencies. Okay, on the Aussie, you have retail sales, trade balance, employment change, unemployment rate, the cash rate, and the RBA rate statement. Any of these are likely to create volatility in any currency that is associated with the Aussie. On the British pound, there's a lot of market reports. You have the manufacturing PMI, the construction PMI, services PMI, manufacturing production, CPI, average earnings index, prime minister's speeches, the Bank of England speeches, retail sales, preliminary GDP, Bank of England inflation report, which we have next week, MPC official bank rate votes, monetary policy summary, the official bank rate, and of course the second estimate GDP quarterly. On the Canadian side, we have employment change, trade balance, unemployment rate, the Bank of Canada monetary policy report, Bank of Canada rate statement, overnight rate, the Bank of Canada press conference, manufacturing sales month over month, CPI month over month, core retail sales month over month, GDP month over month, Bank of Canada governor speeches, and crude oil. Now, one thing I want to highlight is typically the Bank of Canada rate announcement and the crude oil will come out on the same day. When that happens, you want to focus on the rate statement and not the crude oil inventory report. The crude oil inventory report, I think, probably is only tradable when you don't have the Bank of Canada rate statement. Okay? Now, what's the next one's the euro. You have the ECB president speaking, the euro minimum bid rate, ECB press conference, the Eurogroup meetings, and the German IFO business climate. Now, a lot of people tend to want to trade the euro minimum bid rate, and we have that tomorrow morning. It's coming out at 7:45. Actually, the ECB press conference is actually the one that generally will move the markets more. Now, the exception to that is if they come out and suddenly decided to raise the interest rates, well, that may create more movement, but generally it's the ECB press conference historically that has moved the market more. Now, on the yen side, you do have any of the Bank of Japan rate statements or press conferences will generally move the markets. The issue with those is they don't give you a time. They just put anticipated, okay? So generally they come out sometime between 10 and 11 p.m. and then the press conference will be like at 12:30, but they don't give you an exact time. So in my opinion, you just have to watch out for them, but they're not tradable. Then you have the preliminary GDP, which is quarterly. Now, on the Swiss franc, you do have the SNB rate announcement in the press conference, in the speeches. Generally, they do not move the Swiss franc that much. The exception was like when they unpegged the euro. But other than that, they generally do not move very much. Then on the US dollar side, you do have non-farm employment change. That, for those of you that do not know, is the first Friday of every month. And that is like one of my favorite ones to trade. Then you have the core retail sales. You have the FOMC rate in statement, which we have today at 2 o'clock. Then you have the Fed chair speaking, CB consumer confidence, core durable goods, CPI and core CPI, ISM manufacturing PMI, the PPI, the preliminary University of Michigan sentiment, and the unemployment claims. Now, unemployment claims have not moved the currencies as much as they used to like 5 years ago. But again, they could, move the market if they come out with a surprise number. Now, the biggest questions for new traders of currencies is how much does the market move and when? Now, why do you ask that question? Because you want to know if you can use an out-of-the-money binary, for example, on the Aussie dollar at 9 o'clock at night. How far out can you go if you're using an OTM? Or if you're using an at-the-money or a deep-in-the-money binary, how much volatility will you likely see at 7 o'clock at night? Well, this chart actually shows you the historical 2016 minimum moves for the Aussie dollar. So again, if we go back to this question, okay, how much does it move at 9 p.m.? Well, we can actually go down here to 2100, and we would need to use the 2200 because this shows you the ending hour, okay? So if you wanted to know how much it moved from 9 to 10 p.m., you could look under these columns and say, okay, I could probably very easily go out one strike because we have 10 pip, 9 pip, 9 pip, 9 pip, 8 pip, 9 pip, 11 pip, 6 pip. So that tells me that during these months when there is a 6 pip move, which is December and September and August, I might not want to use out of the money, but stick with an at the money, okay? Now, remember the deep in the money question, okay? The key to the deep in the money is you don't want a lot of volatility, okay? So in this case, if we go down to this one, because this is the ending hour, we're measuring 7 to 8 p.m. If we want to do a deep in the money, I would probably generally want to do those in March, April, May, June, all the way through until October, but then stop in November and December. Okay, and that's because remember the Aussie dollar has a 4 pip strike width. So a 4 pip strike width tells me, okay, I can be deep in the money by taking the strike down here underneath price, okay, and still potentially be able to take a profit on a deep in the money. Does everybody understand that? Now remember, these are minimum moves, okay? Here you can see the average move. Now, I like to anticipate when I'm out of the money, I anticipate for the minimum, okay? Now, if you're using deep in the money, you may want to go either to the average move or to the max move, which I don't show here, but I do have one that shows you the maximum move. And again, if you go back to this one and you look here, okay, you may even want to refine your deep in the money, limit them to August and September when they're only moving about 9 pips. Do y'all see that? You may be able to do it in April and May, depending on whether you could get 2 strikes in the money. Okay? Any questions? Now, before we end the presentation, I do want to provide you with my contact information. It's tradershelpdesk.com, and my email address, if you do have questions, is gm@tradershelpdesk.com. Anyone have any questions before we end the presentation today? I do appreciate all of you joining us for the presentation. I hope everyone has a wonderful day, and hopefully I'll see you next week in the presentation. I'm brand new. Which book of yours should I read first? George, are you looking to trade currencies? I would definitely suggest the book on currencies. It's Trading Nadex Binary Options Using Currencies, and that is very specific to currencies. Okay. All right. I hope everyone has a wonderful day. And again, I hope to see you next week in the webinar.